Gold just did something it hasn't done in years, and almost nobody is talking about it the right way. While the stock market has been swinging wildly because of oil prices, war headlines, and AI stock sell-offs, gold has quietly become the most trusted asset on Wall Street. In fact, a recent Goldman Sachs survey found that investors correctly predicted gold's next move nearly 7 out of 10 times, a better track record than stocks, bonds, or crypto. So the question everyone's asking right now is simple. Should you buy gold in 2026? Or is it already too late? By the end of this video, you'll know exactly what's driving this rally, whether it's a smart move for your portfolio, and the 3 ways real investors are buying gold right now, including one most beginners don't even know exists. Section 1. Why is gold suddenly everywhere? Let's start with why this is happening now. 2026 has been a genuinely uneasy year for the economy. You've got the US-Iran conflict pushing oil prices higher. You've got a new Fed chair testifying to Congress about inflation that's still significantly elevated. And you've got a stock market that just had its worst week in months after AI spending concerns rattled big tech earnings. When investors get nervous about stocks, bonds, and the dollar all at once, they go looking for something that doesn't depend on any single company, government, or currency. That's gold's entire job. It's been used as a store of value for over 5,000 years, and it tends to shine, literally and financially, exactly during periods like this one. Here's the number that matters. In a survey of institutional investors tracked over the past decade, more people were bullish on gold right now than on any other major asset class. Stocks, bonds, real estate, you name it. And those bullish calls have historically been right about 69% of the time. That's not a meme stock pump. That's serious money making a serious bet. Section 2. The case for buying gold. So here's the actual argument for buying gold right now, broken into 3 reasons. Reason 1. It's a hedge against everything going wrong at once. Right now, you've got geopolitical risk from 2 active conflicts, inflation that refuses to fully cool down, and a stock market priced for perfection after years of gains. Gold doesn't need any of those problems to resolve in its favor. It tends to hold or gain value because they're unresolved. Reason 2. Central banks are buying gold too. This part doesn't get enough attention. It's not just retail investors. Central banks around the world have been steadily adding gold to their reserves for years, partly to reduce dependence on the US dollar. When the biggest, most risk-averse buyers in the world are stacking gold, that's a signal worth paying attention to. Reason 3. It's historically uncorrelated with stocks. When your 401k is getting hit by a tech sell-off, gold often moves in the opposite direction, or at least sits still. That's the entire point of diversification. You're not trying to beat the market with gold, you're trying to protect yourself when the market turns on you. Section 3. The case against buying gold now, before you go dump your savings into gold bars. Let's talk about the other side, because a responsible finance channel doesn't just tell you what you want to hear. Gold doesn't pay you anything. No dividends, no interest, no cash flow. If you buy $1,000 of gold and hold it for 10 years, you'll have gold, not gold plus income. Compare that to stocks, which historically outperform gold over long time horizons, specifically because companies grow earnings and pay dividends. You might be buying into a crowded trade. When 75% of surveyed investors are already bullish on something, a lot of that optimism may already be priced in. That doesn't mean gold can't go higher, but it does mean the easy gains may be behind us, not ahead. Timing it perfectly is nearly impossible. Nobody, not Goldman Sachs, not your favorite YouTuber, not a Wall Street veteran with 40 years of experience, can reliably call the top or bottom of a gold rally. If you're buying gold hoping to flip it for a quick profit, you're speculating, not investing. Section 4. How to actually buy gold. 3 ways. If you've decided gold makes sense for your portfolio, here are the 3 main ways people do it, ranked from simplest to most advanced. 1. Gold ETFs, easiest for beginners. Funds that track the price of gold, tradable through any brokerage app just like a stock. No storage, no insurance, no hassle. This is where most beginners should start. 2. Physical gold, coins and bars. You actually own the metal. Some people like the tangibility of this, but you have to think about storage, insurance, and the fact that you'll pay a premium above the spot price when you buy and often sell below it later. 3. Gold mining stocks. Instead of owning gold itself, you own companies that mine it. These can move even more dramatically than gold prices. More upside when gold rises, but more risk too, since you're also exposed to that company's debt, management, and operating costs. A common approach financial advisors mention is keeping gold to a modest slice of your overall portfolio, often cited in the 5–10% range, rather than treating it as your main investment. Section 5. The verdict, 7:30–8:30. So, should you buy gold right now? If you're looking for a way to diversify a portfolio that's currently 100% stocks, and you want some protection against the kind of geopolitical and economic uncertainty we're seeing in 2026, a small allocation to gold makes sense for a lot of people. But if you're looking for your next 10x investment, or trying to time a perfect entry point, gold probably isn't that. And chasing it emotionally after a big rally is exactly how people buy high and sell low. Treat gold like insurance, not like a lottery ticket. That's the difference between using it wisely and gambling with it. If this video helped you understand what's actually happening with gold right now, hit subscribe. Every week I break down what's moving in the markets and what it actually means for your money, not just the headlines. And let me know in the comments, are you buying gold in 2026 or staying away? I read every comment, so drop your take below.